Hello, I'm Alan Kohler, Editor-at-Large of Intelligent Investor and Finance Presenter, columnist and podcaster for the ABC.
And I'm Stephen Mayne, contributor at Intelligent Investor, founder of Crikey, shareholder, activist.
And we are the Money Café.
We're the post-census Money Café, Alan. We're meeting on the day after.
Did you do your census?
I did it 2 nights ago, actually. I was net disappointed that they weren't more ambitious. I mean, we're in the questions business. I mean, I guess, did you come out and say, I guess we can both agree, we're both straight, non-religious male journalists, I guess. We're all on board on that. But
correct.
But then they didn't get any more adventurous than Are You Straight, did they? Really? I mean, why are they asking for our income but not asking for our net worth?
Yeah, look, I thought it was hopeless, to be honest. It was just like this. They could ask for so much more than they did. Which would be interesting and important, I think, to find out stuff. I mean, they didn't ask us whether we've got any pets.
Well, I thought about that. Councils have got the dog and cat data. So there is an element of what we ask that we don't know. So pets, maybe they can get away with it. But surely the split between EV and ICE vehicles, I mean, asking about cars. And if you're going to ask about number of bedrooms, I'd have thrown in, landline and number of televisions.
Sure.
For cord cutting and just stuff like that. I mean, it's not going to cause a blue in the household because you've got to watch that. But anyway. And, work from home. Yes, there's work from home in there. But what about, do you get any paid help coming in? Gardeners, cleaners or nannies? That's a trend in society which the government wouldn't have any data on.
And also, are you using AI? And to what extent are you doing it?
Correct.
That'd be worth knowing.
And also the climate sort of insurance thing. Are you insured for, not only just private health, but catastrophe insurance, contents or, total destruction insurance.
Yeah.
Anyway, but look,
I mean,
it
took me about 20 minutes to do it. I mean, I would have been happy to take another 20 minutes, to take twice as long.
Yeah. No, look, I agree. And even on the income one, I mean, they didn't even split labour and capital. I would have loved to have answered the question, what's your biggest side hustle? So you had to name your employer. Did you name the ABC or Investma, your number one employer?
The reason I named ABC is because it's easier to type.
Well, I said InvestSmart. There you go. So, but I wanted to start explaining about other gigs and talk circuit. There was sort of no provision for that. So it didn't really accommodate that multiple employer situation very well either. And I guess my other big beef is having spent $700 million and having 30,000 people out there knocking on people's doors last night. It's going to take us almost 12 months to get the data. I mean, Anthony Green should already be analysing the swing in favour of Buddhism and the swing against Catholicism and, the early booths show. But 10 months to get the data released to the public? I mean, how do you justify that?
Yeah. Well, is
that just perfectionism?
The Australian statisticians take longer than anyone else in the world, I think, to come up with the national GDP. Take 2 months. The Chinese take 2 weeks.
Unlike the Chinese who just guess, at least they get it right. So
they do get it right. The Chinese do it in 2 weeks. But China starts with the answer, don't they?
Well, that's right. So anyway,
all right.
We're saying more questions, be bolder and do it faster. But apart from that, don't cancel it. It is a useful exercise. It's only every 5 years. And stick with it. Just be bolder next time.
Oh, they could probably do it entirely online now, don't you think? I mean, they could probably forget about the paper one.
Yeah, I agree. Just mandatory online and get those 30,000. I mean, I helped my mum do it, for instance. Get those 30,000 people assisting people doing it online, not distributing it.
And then if they've got it online, they can come up with the answers in a couple of weeks.
Correct. Put Anthony Green in charge and away you go. All right. Far more. And then you could do it every year because it would cost about 10% the figure.
That's right. Exactly. And do it every year. Exactly.
Yeah.
Okay, we've got to sort it. We've sorted it out for them.
We've sorted it, Alan. We've sorted it. Us straight old male non-religious blokes, journalists. We've sorted it.
That's right. Now, have you been looking at the CBA Commonwealth Bank result this morning?
Look, it's just dropped because we're talking at 10 to 8, so it's just dropped. And, profit's up, cash profit up 7% to 11 billion. Dividend up 4% to $5.05, so it's getting close to the original $5.40 float price back in 1991.
Oh, the dividend is close to the price they floated at. Yeah, wow.
Yeah, they floated at $5.40, and now they're paying $5.05 a year. So the government got $10 billion for something now worth $291 billion. But I went back and looked at the figures from 20 years ago last night, just to sort of give a longer term comparison, and it is just amazing. So the net interest income was $6.5 billion in 2005-06. Today it's up 7% to $25.6 billion. So it is a volume business. So the home loans, the net home loans after the offsets, is up from $155 billion to $625 billion. Sorry, $630 billion. And if you add in the $95 billion of offsets, the $725 billion of offsets. And then the deposits, they're 79% deposit funded. And like their home loan market share has grown from 18.9 to 25%. And they've gloated this morning that it's the first time in 15 years any bank has maintained market share or grown its market share in all of the 5 main banking categories. So it is a market share volume story. They're doing 1 in 3 households. They are the main financial bank, and a quarter of businesses. And that home loan number and that net interest margin number, net interest income, I should say, because the net interest margin is down from 2.29 20 years ago to 2.05. So it's a skinnier margin, but on a hugely grown volume, and that's made net interest income a staggering $25.6 billion, which flows through to $11 billion of cash profits and $8 billion for dividends for shareholders for the year and $5 billion for the government. So don't complain about making too much. We've given the government $5 billion in tax.
Alan's been saying for a while now, possibly 2 years, that the stock is overpriced, too expensive, yet it hasn't really fallen. It's stayed where it is, basically, hasn't it?
Well, it dipped for a bit, but it's gone back to back to a record high.
Yeah.
So it's back up at 173.92 last night, and only peaked at 183 or thereabouts. So it's very near its all-time record highs. Unless Matt Common today says, like ANZ, I predict house prices are going to fall by 15%, and I can see our home loan book falling, unless he comes out and says something very bearish on housing in the outlook. I think that the price will hold up, and it's stronger for longer for CBA.
Yeah.
So that's our biggest stock. What about big tech? AI, it's just booming again, although it's off a bit overnight, I must admit. But it's still looking very, very toppy, isn't it?
Yeah, that's right. Well, yeah. The market's at a record high in Australia, right? Close to it. And being held up by non-AI stocks in Australia, like Commonwealth Bank and BHP and so on. But AI, yeah. Look, everyone's talking about a crash coming, but there's no sign of it yet. I don't know. I don't think. I think it could easily go for a while yet without without too much of a correction.
Well, I think we might look back. The high water mark's surely going to be NVIDIA's boss Jensen, standing with 6 CEOs from Wall Street, KKR, BlackRock, Goldman's, Apollo, Brookfield, and Blackstone, coming up with a $500 billion investment fund to treat compute or chips as an investment class of its own. So you're going to have compute futures, Alan. You're going to have oil futures, commodity futures, compute futures. And he's just trying to deal with the whole round robin thing, is that people are criticising everyone, saying that NVIDIA is funding its customers Cisco style with routers in 1999. So his solution to that is to deliver an all-time amazing CNBC interview with the Magnificent Seven, literally, the 6 financial CEOs and Jensen, saying $500 billion fund to fund this multi-trillion-dollar AI infrastructure build-out for compute. So
I don't know where the returns are going to come from. I mean, look, it's more than just what Cisco did. It's what Enron did as well. I mean, I think that they're clearly just kind of starting to prop each other up, and also they're borrowing huge amounts. They're raising colossal amounts of money in debt now too. So it clearly is going to be a problem, and also what's obviously going to happen as well is that they're not going to make enough money from AI to justify the expenses, the expenditure on capital. I mean, you can do what you like about creating a compute fund or whatever, but the compute has to pay for itself. It has to develop. It has to provide a return. And it seems to me that what's going on now is that China has come in, and whenever China comes into an industry, the profits walk out. And so these Chinese AI models are just as good as the American ones, and they are much cheaper. So they're just kind of destroying the margins of the profit margins of the Americans. And I think that, I read a piece the other day saying that the question is whether AI is like petroleum or is it like pencils? Petroleum became an oligopoly, obviously a cartel, and prices were held up, and it needs to be regulated. Pencils started off at $20 per pencil when they were first invented, and now they're 11 cents because anyone can do it, and it's a commodity. So I think it's quite obvious that AI is becoming a commodity, and the price of it is going to fall.
Yes, but the market's still buying it. I mean, Intel has just completed a $20 billion secondary equity raise at $95 a share, and it's literally 12 months after the US government bought 9% at $20.47 a share, or bought 10% for $9 billion. So if Trump exited his Intel stake today at this $95 price that they've just raised $20 billion at, he'd make a $32 billion profit in 12 months on his $9 billion US government investment. So, the market is still believing it. OpenAI has just done a $7 billion buyback to take out their stock. They've got enough cash. Anthropic is still looking at the October IPO, and they're talking close to $1 trillion of valuation. Even SpaceX got up from a low of 104.83. It got up to 138, back above the floor price, although it's off 4% today, back to 130, just under 134. So I guess my point, Microsoft has put on $1 trillion in market cap since I was talking to James 2 weeks ago. So right now, the market is still believing the story, even though you're quite rightly talking about where's the return and China wipeout. But the market is absolutely believing the capital being raised is extraordinary. NVIDIA is sitting there today at $5.26 trillion market cap, well ahead of next best, Apple at 4.45, and it's conducting the orchestra, rounding up all the CEOs of Wall Street to say, come on, boys, you got to fund this because it's the biggest thing ever.
But it's interesting, isn't it? I mean, a lot of the profits being made and the kind of the market's enthusiasm for it is based on the capital expenditure they're making. In particular, OpenAI and Anthropic, which are spending hundreds of billions of dollars on compute. But they're losing colossal amounts of money. They're both of those companies that are propping up the Magnificent Seven. I mean, the money that Microsoft and Google and them are making is largely coming from OpenAI and Anthropic spending all this money on compute, and they are losing money. So I just can't see how it can go on. And I think a lot of the enthusiasm in the market is based on a lack of understanding. I mean, I don't think anyone really understands what's going on or how it's. Well, certainly nobody knows how it's going to turn out. So I reckon it's going to end badly, I think.
Well, I agree, but I guess I'm happier talking about an AI bubble than a crypto bubble. At least we're not talking about crypto anymore, are we? I mean, it's just disappeared. The whole world is obsessed with this AI trade, and
that's true.
I do think we are going to see. I think for the theory to play out, we need to see Anthropic and OpenAI become more transparent, and then we just see because SpaceX is going to run out of cash. They've raised $85 billion in equity, and they're spending it so fast, they will need to raise more equity in a couple of years. That's how quickly they are burning through their cash. Now, that's just not sustainable. But right now, the market's valuing them at $1.8 trillion again as the back in the top 10. And even TSMC, the Taiwanese chip giant, which makes all the NVIDIA chips, they're now worth $2.17 trillion. They're now the sixth biggest company in the world. They've never been as big as that. So it still is ultimately primarily a picks and shovels game, with NVIDIA and TSMC together worth $7.4 trillion. And their customers, the people who are paying too much for chips, and I think people argue NVIDIA's big play with all these Wall Street guys is just about persuading them to move on from talking about NVIDIA cutting prices and actually move on to talking about, no, let's just fund the existing ridiculous 80% profit margins that NVIDIA's making. So
it's interesting you mentioned crypto, and you're right, nobody's talking about it anymore, but it's interesting. I mean, the price of Bitcoin is still 63,000 US. It fell, obviously, at the start of the year from about 100,000 to 63,000 in February, and still there. Hasn't fallen any further. It's basically stabilised for, 6 months?
My little measure going forward, Alan, is going to be my one Commonwealth Bank share against my one SpaceX share. One is the biggest company in Australia, making $11 billion a year, and the other is burning double that in cash. And at the moment, SpaceX is 185 in Australian dollars, and CBA is 174. So I'm going to follow that little SpaceX versus CBA measure. But even so, SpaceX is worth 6 times the CBA. So it's more than that, actually. So about 6 times. So it's just crazy valuations, but we'll see. And then I guess we've got the valuation of the oil price as well. I mean, it's sort of up 88 again, and the Iranians, their tolerance for pain is high, isn't it? Their ability to cause trouble, not bend to Trump's will. They're just boxing on, aren't they?
They are. And in fact, there's this kind of amazing disconnect between what Trump is saying and what Iran's saying. Trump's saying, oh, yeah, we're talking, and, they're desperate to make a deal, and, we're close to having a deal. And Iran says, we're not even talking. And the only people we're talking to is Oman about how we're going to control the Strait of Hormuz. And so I think you're right. I mean, Iran's is definitely suffering pain, but they're okay. They're betting that they can suffer more pain than Trump can. And they're probably right, I suppose.
Well, it's 160 days of war, and it's 85 days until the midterms. And that's when Trump may well face his Waterloo in a sense of Republican control, because if the war is still, if it's still going on at the midterms, early November, it's hard to see it being a happy result. But I think another interesting thing is that the US Strategic Petroleum Reserve is now below 300 million barrels for the first time in, I think, more than 30 years. And it's interesting as well that diesel prices are high. Do you know that 70% of Russian diesel production has been taken out? So this is why diesel prices are so bad. Is that yes, it's the Strait being closed, but also the Russian impact. 70% of their diesel not exporting at all. So crude is nowhere near as high as diesel prices, and that's really turbocharging the move to EVs as well, as you saw on the news last night with your graph. That was interesting, wasn't it? The EV charge based on high petrol prices and diesel prices.
Yeah, that's right. So EV sales this year so far up 157%. I mean, obviously from a low base. Plug-in hybrid sales up 119%. And sales of diesel and petrol cars both down this year. I suppose you'd say it's not surprising. I suppose the amount of increase is surprising, and I keep looking when I'm driving on the road. I keep looking for exhaust pipes in the back of cars, and increasingly not seeing them.
I was driving on the other day. I said to my friend, the 4 cars in front of us are all BYDs.
Yeah.
It's just
I mean, it's hard to
amazing,
tell
isn't it?
sometimes. You can pick a BYD or a Tesla, but often you can't pick them, except when they haven't got an exhaust pipe.
Yes.
And there's a lot of cars now without exhaust pipes.
And they're not at all worried that there used to be 20 million barrels a day going through the Strait of Hormuz, and last week it was down to 2.2 million barrels a day. And it got up to 8 million with the so-called peace agreement a month ago. So 20 down to nothing, up to 8, down to 2.2. And there's a massive imbalance at 2.2. I mean, China have slashed daily imports from 12 million barrels down to 4. It's back up to 9 now, so they've run down their reserves quite a bit as well. The Americas have cranked up production. They've been a big driver of the extra capacity. So the world has responded reasonably nimbly, but it's not sustainable at 2 million a day.
No.
So it can't hold with the choke point being choked long term. And the fact that those US reserves are down to 30-year lows is a sign of that. So something's got to give.
Yeah.
And we better do the Reserve Bank Governor, I guess, before we do questions. Did you watch? I watched your son ask a question yesterday. I was quite impressed overall with the 50 minutes of questions from the journos. It was certainly better than listening to 2 hours of shareholder questions at the recent Macquarie AGM, that's for sure. So what did you think of the RBA Gov's performance yesterday?
I wasn't able to watch it, but I did. I spoke to Chris about it last night, and he was pretty happy with it, I guess. I think that the RBA. It looked like, I mean, there was a hold of rates, and then the data in the statement on monetary policy was pretty as you'd expect, and then she was pretty hawkish, I guess, when she spoke. So I think the expectation now is that there will be a rate hike in November on Melbourne Cup Day, which obviously will depend on what the CPI is like for the September quarter, which is coming out on October the 28th. So that'll be a few days before the November meeting, and it'll all depend on what the inflation rate is.
But she has forecast they're going to get inflation down to 2.5% within 18 months. And I think she's still sort of suffering from the fact that they've failed to meet their 2 to 3% target for 5 years. It's literally been a 5-year fail post-COVID, whereas, the Americans are down around 2.5%. Ours is a worse performance. And so she's basically just warning everyone, we're predicting it, but by jingo, if you don't deliver this low inflation, I'm going to go you again.
Yeah, that's right. But look, I mean, the fact is, although they haven't got the inflation rate under, below their target or whatever for 5 years, we haven't had a recession either. In order to achieve 2.5% inflation, they would have had to slow the economy much more quickly. Yeah. And 18 months is a long time. I mean, if they're saying that we're going to take 18 months to achieve it, that's good. I mean, I think they should take a long time and not say we'll do it by the end of the year or something, because that would require a really tough hit to the economy.
Yeah. And I think a bit like Kevin Walsh, she's wanting the markets to do her work for her. So yesterday's jawboning was all about putting up the market interest rates, and so she doesn't have to actually do it.
Yeah.
So I think the last thing she wants to do is to go again. Same with Kevin Walsh, because Trump will blow him up. But if the markets can do that more contraction repricing of market interest rates to help stamp out inflation, then central bank governors always prefer the jawbone to work than the actual coming down with the sword of the higher rates. So I think she's playing that game as well.
Let's go to questions, but before we do that, let's have a quick word from our sponsor.
Markets love a good story, but value investors prefer a good price. Join portfolio manager Nathan Bell and intelligent investor founder John Addis for a live webinar. Against the Crowd, Is This Only the Beginning of the Value Rotation? On Thursday the 13th of August at 1 p.m. They'll unpack what drove the intelligent investor Australian equity income fund's recent outperformance, where they're finding value now, and the risks they're watching. Register now at offer.intelligentinvestor.com.au/INIF to watch live or receive the replay. Past performance is not a reliable indicator of future performance.
And just a reminder before we go to questions, this is general advice only. If you need personal advice, please go and see a an advisor. First question's from Catherine. As a regular listener, first time to write in, I'm interested in your thoughts regarding forecasts of destabilised financial markets and Armageddon as a result of anticipated changes to labour markets driven by AI, and how or if it's possible to insulate ourselves and the world from such a shock. In late June, there was an opinion article in The Economist magazine by guest writer Carson Block forecasting an imminent financial crisis following the anticipated displacement of many senior, well-paid knowledge workers from the employment market over a short period. The writer suggested this would precipitate a sudden shift of wealth out of stock markets across the globe, particularly as employees seek to access their retirement savings en masse to service their debt. So, I don't know. What do you think?
Oh, look, I'm not in the catastrophe camp. I think there will be a net shift from white collar to blue collar work. I was interested I heard a US logistics CEO being interviewed overnight, and he was saying that, look, don't worry about robots. They're going to do the jobs that us humans hate. They're currently slower than humans, so we're a couple of years away from the robots being as efficient as us. But they'll be the ones doing the work in the freezers, because who wants to work in a freezer picking meats or whatever it is? So they'll just augment the human work. They won't take over. So I'm probably more in that camp. I don't think, because the political economy just won't allow. They'll regulate away any mass nuclear winter of jobs caused by AI. So I'm confident that the politics will sort it. But as for Australia, because Catherine asks, how are we positioned? Well, we're not all in on the AI bet, and we're actually being a commodities country with all, providing a lot of the metals, the copper, the rare earths, lithium, uranium, the power metals, the coals, iron ores. We're actually a huge beneficiary of this sort of massive build-out on the infrastructure stage side of it anyway. Once all these data centres are actually built and we're over the construction boom, a bit like getting over the mining construction boom, then when it settles down, we may suffer if there's less demand for commodities, and that's the time when the jobs will be fading if you've literally got all this compute just doing all this AI and disintermediating all these white-collar jobs across multiple industries. But I don't know. We've had this chat before, Alan. You're more bearish than I am. Are you still as bearish? Are you as bearish as Catherine, this Carson Block bloke she's quoting from The Economist?
Oh, look, I don't know. To be honest, I've absolutely got no idea, and I don't think anyone really does have any idea. I keep seeing these videos of humanoid robots doing stuff, including building houses and kneading dough to make bread, and
wouldn't that be great if we had someone to build the houses, Alan?
Well, sure, but people
construction labour shortage crisis.
I know, but a lot of people make a living from doing that now. There's a lot of bakers in the world, who get up in the morning and knead dough and make bread that we end up buying. I think that, and I do think that the companies are pretty motivated to use robots and AI to the extent possible, because on the whole, employing people, human beings, is a pain in the ass. They have to go home at night instead of working all night. They have to get holidays, they get sick leave. You've got to pay them a minimum wage. All this. I just think companies will tend to use robots and AI to the extent they can.
But that's always been the case.
I know.
And bank tellers have been replaced by ATMs, and the trains don't have drivers anymore in the Sydney Metro or Rio's Pilbara mines. This is a long-term trend.
That's true.
It's just going to continue going, but is it going to accelerate? That's the debate, and I think it is going to accelerate, but not to the point of a nuclear winter on jobs.
Well, maybe. I hope so. I think governments are good at dealing with what's happened in the past, but they're not very good at predicting. Like the governments, they've got no idea what's going to happen, and fair enough, they don't know.
Maybe the next census in 5 years will have an AI question. That'd be useful, wouldn't it? Because they're certainly not going to be helped in any way working out what's going to happen based on the questions we filled in last night, that's for sure. Now, Julie says, regarding last week's podcast, she really liked your comment, or she didn't like it, but she thought it was very relevant, Alan, saying that you believe that the cynicism and the disaffection in the community, the biggest factor has been that house prices have risen for 25 years, and this has made it very difficult for young people to get a house. And that's why you think there's a lot of support for other parties and loss of political respect, etc. And Julie goes on to say, what surprised her was the sheer prevalence of conspiratorial thinking, particularly around the recent Oz Alert emergency test. And is this polarisation due to inequality, as James has argued? And what changes could we have brought in to improve the level of trust and to deal with this disillusionment? And you touched on it last week, Alan. I'm going to double down on it. I think the silver bullet for democracies is a random selection third chamber sitting above the Senate and above the upper houses in the state parliaments, giving advice on difficult issues, randomly selected, because it's beautifully corruption-proof and it is a genuine cross-section of the community. It has legitimacy. People trust it because it's genuinely the community giving their advice to governments. It gets rid of the donors, the lobbyists, all that rubbish that people are so sick of in the democratic system. So I would go all in on Greek-style sortition to build community trust in political institutions.
Yeah, well, I agree with you, really. I think you're right that some sort of citizens' jury to get involved in the political process would be great. The problem with that idea is that it tends to be a distraction because it's not going to happen. And what that means is that if you end up talking about this, a possibility of that, and why don't we do this and we end up focusing on that, you end up being distracted from the real game, which is to try to fix up politics as it is, which is, how do we make it more transparent now? And I think there are a lot of things you can do, particularly about donations and transparency of political operations and money, and the way it works now. I mean, I think that is probably the way it needs to go. I mean, Victoria's got this huge problem now with this suburban rail loop, which is, they've signed all these billions of dollars of contracts, and it's clearly a terrible idea. And it was. We need to find a way to ensure that sort of thing doesn't happen again. And I don't know what the answer to that is. I mean, how you can prevent that.
I think there's a quite simple answer to that. When I was a spin doctor for the Liberals in the early 1990s, you had to get loan council approval from Canberra to borrow any money.
Right.
So there was an emergency meeting of the Loans Council in late 1991 to retrospectively approve all the secret loan breaches by the Kerner government in the dying days of that Labor government. Now, you can borrow as much as you like, and everyone just assumes that the feds will bail you out because no English-speaking country has ever defaulted. So basically, it's an endless credit card for reckless state governments, non-sovereigns, borrowing on the federal system. So I would fix that Victorian problem by giving federal government spending control and controlling the debts of their subsidiary state governments. And because it's just no regulation, borrow as much as you like, in an era of printing, that's how you can be re-elected borrowing. I mean, literally Victoria is borrowing 400 million cash a week. Their negative cash flow each week is 400 million. No one cares, and people keep lending, just like they keep lending to AI, because they just assume that Microsoft and all those guys are good for the credit, and they think that all Victorian and all Australian governments are good for the credit because ultimately we're a good sovereign country and the feds won't let a state default. So that's the little fix I'd do to stop state governments going bananas, is federal regulations and control over the amount of money they can borrow.
Keelan says, I work at a company with a strong focus on data protection, so we only allow Microsoft Copilot because it has improved data protection rights for AI use, despite knowing Claude is better and Chinese AI tools would be far cheaper. I would love to get your thoughts on how companies should approach data privacy with AI. And I think this is a really important and interesting problem, and there's clearly a sort of an arms race going on with AI between hackers and defenders against hackers. trying to keep up with each other because the hackers now have access to AI hacking, which is getting better and better. And I think this is a serious problem. I don't really have an answer to it, Keelan. I'm sorry. I mean, as to how a company should approach data privacy, I'm not really sure. I think it's a serious problem.
Well, hacks is a massive and growing problem. Hence, cybersecurity spending and focus has never been higher. But I think Keelan's question also touches on this sort of open data trust situation. And if you go all the way back to MySpace versus Facebook, Murdoch, when he bought MySpace, continued with this closed model where it's our data, it's our system. Whereas Facebook, and I remember Mike Cannon-Brookes giving a speech 20 years ago, and I remember hearing him say this, Facebook opened up their whole system and let people develop apps that fitted around Facebook. And MySpace died because it did this walled garden, we're not going to tell you anything, we're not going to share anything, and Facebook absolutely flourished. And this is where the whole system with, Anthropic and OpenAI with their closed proprietary models versus the open source Chinese models, which is let it rip, everyone have a look, this is how we do it. That's great at one level, but if you tie that with people having their data hacked and stolen, because data is often the most important asset that big corporates have. I mean, the Commonwealth Bank's data, what physical assets does the Commonwealth Bank have? They have the trusted data of, 1/3 of Australian households. That is top secret, and they've got to absolutely protect it. If they get a reputation for having their data hacked, bang, they're out of business. So it's hugely important for corporates. And so people like the Commonwealth Bank are not going to let people just march in and to see their data, and they're investing heaps in cyber. So I agree with Keelan. It's a really important issue as to your philosophy as to how much you lock up your data and how important that is for your business.
Part of the problem, it seems to me, is that the core kind of race is going on between the United States and China, where each of them is trying to get advantage, trying to get supremacy in AI. But it means that both of those two countries have kind of allowed data safety regulations to take a back seat to the competition for dominance. And so it's really just left to companies, individual companies and other countries to basically deal with it. And I think, companies really need to focus on this. And so do countries like Australia need to do far more than they're doing.
Well, the US have had a let-it-rip approach from the get-go, and I think many would argue that's why they dominate big tech, because they haven't got in the way from a regulatory point of view. But it's now causing all sorts of problems as well. So now Heath says, enjoy the podcast, EV and hybrid sales have reached record highs. I've wondered for years that as EV cars displace high fuel-powered cars, what a transition away from fuels would look like, and whether the cost of producing, distributing and retailing fuel when demand drops would lead to higher prices for those who require the liquid fuels. Do you think Australian businesses are preparing sufficiently for something like this to happen? It's a bit like solar panels, isn't it? Is the people with the legacy old system, as in, big coal-fired power stations and big refineries, are they left holding the bag? And are we ready for a precipitous drop in fuel sales in Australia with the move to EVs? I guess it's only going to happen when the government actually mandates a shutdown of fuel, isn't it?
Well, I think it's it's a scale issue to some extent. I mean, the profit margins, the way that the fuel companies are organised, both refining and petrol and diesel retailing, the way it's all organised in terms of the number of petrol stations they've got and so on, is based around a certain level of demand. And as demand falls because people are buying electric cars, their scale declines, and the margins get focused on fewer and fewer petrol stations. So look, I think it's that is going to be a real problem. And I don't quite know what the answer is. I'd say at some point the government's going to have to get involved, because the petrol companies will have to start increasing their prices for those who are still driving petrol cars and diesel cars in order to maintain their margins.
But don't you think that petrol stations have already morphed to being more convenience stores competing with Coles, Woolies, Metcash and Aldi? I mean, On the Run and, Caltech, Ampol, they've all gone, 7-Eleven, they've all gone up market. So I think that just the progressive switching off of the profit share and revenue share from petrol sales at existing convenience stores, that will just continue and manage down. And over time, they'll put in charging stations and they'll get some revenue from that. And we've already gone from 8 refineries to 2 in the last 30 years. So the rest of it would just be turning off the import terminals when the demand has fallen. So I don't think there's a crisis and there's going to be a sudden drop. I think it's been a long-term steady thing, and the system, humans are very creative. We'll adapt, and it won't be a disaster. Now, Stuart,
I love your confidence on this.
Oh, I love it. Total bull. Now I'm going to ask this one because Stuart's asking that, Alan, you mentioned you were reminiscing about your father, who ran into trouble as a builder in 1962 when you were a kid and you lost your home. And it made me think, says Stuart, how interesting it would be to read your life story. Will you, or when will you, write your autobiography? Please. Well,
I think my life story is not quite as interesting as you might think. And anyway, it's not something I'm going to be able to do until I retire, which I probably will not do.
Never retire.
Well, look, I might retire. I might have to retire for health reasons at some point, but I mean, I'm not interested in just not working.
74 and still going strong. Well,
I'm enjoying it.
Maybe we'll get one when you turn 90. Alan Kohler, my first 70 years in journalism.
I'll come on to the ABC studio to do my finance reports with a walking frame.
Or you just do it from home like COVID. You get the home studio. Yeah. Now, you've caused 3 questions, Alan, on your cost plus building idea. I'll let you pick which one you want to go with, but it's a revolutionary idea, and a lot of readers have responded to it. Some of them saying it's not going to work.
No, I think they're right. It's not going to work. I mean, there's no need to read all the questions. They're basically saying, look, yeah, that's fine, but except that the problem is that, builders aren't always trustworthy, and so the whole thing requires fixed cost. And I accept that. Fair enough. I don't, and I really think you couldn't just switch the whole industry to cost plus because things would get out of control. I understand that, and also there's one of the listeners has raised the question of lending. A lot of loans are based on the price of a renovation. Known at the beginning, so that the bank can lend you the amount of money. You've got a contract with the builder, and then you take that to the bank to borrow the money for it. And I think that's true as well. I mean, I think it'd be more difficult to get a loan from the bank without a fixed contract. So look, okay. I mean, I accept that there are a lot of problems with what I said, which probably means that it won't happen. I do think that the fixed contracts, however, are a problem. And the main reason they're a problem is that because builders are getting out. They're finding it too hard, particularly with when inflation is high.
And dealing with the CFMEU. So,
yeah.
I mean, because moving to cost plus was one of the biggest problems with the big build in Victoria is no one would offer a fixed price contract because everything was blowing out. You're dealing with the CFMEU. And so they all just said, we're only going to do these things if it's cost plus. And then no one gave us stuff as all of the billions were being looted by bikies and everything else because it was just the government was just picking up the tab.
Yeah, that's right. So that was a salutary tale, cautionary tale.
Don't invite the CFMEU to run cost plus contracts because it'll be good night, Irene. So now you can pick the next one, boss.
Miriam says, love the pod. I was having a sandwich with my dad this afternoon and got a cold call from one of the big four, with the banks, which I bank with. I have a term deposit with them, which is money from the late grandfather. The caller asked me what I intended to do with the money, which I thought was quite strange. I've had a few calls like this from my bank over the past few months asking what my intentions are with the funds. I want to ask whether you're aware why banks would do this. Why are they doing that? Stephen, do you know? I don't know.
Look, I think it's a bit unusual. In an era of scamming, it's a bit unusual to be getting sort of phone calls from people you don't know. I mean, maybe...
I'd say it's a scam, wouldn't you?
I think it's probably a fair chance it's a scam. Yeah, because most banks are not sort of doing that these days. I mean, unless Miriam, the AI model is telling the bank that she's a flight risk, let's lock her in. and she picks up our call. So there's a file note saying Miriam's very chatty. She'll have a call. She said to, but generally, banks should not be pestering people, given that they're spending a lot of time and money fending off scammers with people who are constantly being pestered on the phone. So watch out, Miriam, and don't do a deal with a bank on the phone. That's the first thing I'd say. So now, last thing I think we'll do is Rob. He says, my partner and I were both in our mid-20s. We've just signed a rental lease for a small one-bedroom apartment, and we were shocked to discover that the building is covered by an embedded network for electricity and hot water. And in this case, it was Origin Energy. So Rob goes on to explain that he thinks they're paying overs for water and electricity, but they've got nowhere to go because the developer has done these deals with the big providers and he's just a price taker. So some customers in units, in apartment towers, are locked out of the ability to shop around, it seems, Alan. And Rob is saying, where's the ACCC protecting me from being gouged because I'm paying more for my electricity than my parents down the road with a 4-bedroom home and a swimming pool who can go and shop around for the best deal?
I think it's an absolute outrage, absolute disgrace. I can't understand it. These things should be banned. I had no idea this was going on. Did you?
No, but there's a certain logic in doing a scaled deal, but I presume the body corporate every few years would be able to renegotiate for the overall. It's a bit like having an overall insurance deal for your whole apartment tower rather than everyone having to. So, yeah, I think certainly the pricing that Rob's copping sounds ordinary. And if, the developer's getting a skim or something or, it doesn't sound great, but there is a logic in scaled negotiation in communal living in apartment towers. But he, in this particular case, it sounds like he's getting done over and it's not fair and he's not going to take it anymore and he's writing to the Money Café about it.
He is too. Okay.
When in doubt, write to the Money Café. That's what we like.
That's right. Thanks, everyone, for listening to today's episode of the Money Café. Next week, it'll be with James Thompson. So send in your question and we'll answer it together by emailing themoneycafe@intelligentinvestor.com.au. So until then, I'm Alan Kohler, Editor-at-Large of Intelligent Investor and finance presenter, columnist and podcaster for the ABC. And I've just done a podcast with Chris you can find on YouTube if you want to.
And I watched it and it was excellent. And you're showing us up with video, this newfangled video thing, Alan.
I know.
You and Chris, You had to do your hair for that one, didn't you?
I did my hair. No, it was good. No, he was great. He's so fantastic.
He was fantastic. It was a great watch and listen.
There you go.
All right, we'll talk to you in a couple of weeks. Over and out.